Hello, YouTube. We're getting a warning that stocks could drop as much as 20%. We're talking about tech stocks. So, as we are falling right onto our 50-day moving average and our 50 weekly moving average, we are getting a push pull, which we talked about. And this is so important because as we now look here to our 50-day moving average, we got to ask ourselves, how do we get here? Well, Mike Wilson said that we could see about 20% of downside in tech stocks and meme stocks, which I know you guys love to trade. Jerome Powell said, "Hold my beer. Let's see what I can do." He brought the pout and stocks went down. That's pretty much what happened. We're going to go into some detail now, have a little bit of fun, and leave you with a clear takeaway at the end of the video. So we were looking at this pattern where we crash land, we form our downtrend, which we ultimately break. Same thing which formed over here on the right-hand side. We push over the downtrend, get a gap over the 50, and then we reverse. Well, that's pretty much what we did here. We zoom in a little bit closer. We got over the 50 with a gap. We push higher. We note that reversal candle, which happened here on January 17th, exact same one we got yesterday. We talked about the failed breakout. That's what happened. We got continuation and slammed it. We opened at 404.42 or 3 cents below that critical area. We pushed up about another 20 cents and then just faded all day. And that's what's so important here is that now that we are at the part where I believe we're about right here. We've now filled the gap. So the gap's now been filled going back to before. Just like our gap got filled, we bounced off the 50 DMA, just like we did over here. Then we gap down. And because we have a fat candle and we're closing near the low of the session, we could be gapping down. That's like a pretty high possibility. If we do or don't, we just want to watch for the reaction now. This is the part where the bulls need to show up. So if we're getting warning that we got 20% of downside, and why do we care about Mike Wilson? Well, we care about him because he was ranked #1 in last year's institutional investor survey after correctly predicting the sell-off in markets in 2022. And then in October called for a tactical rally and for us to go up. That was the low. So this guy has been calling for a bear market in 2021. He was correct in 2022. He called the tactical reversal off of the October low correctly. And now the question is whether or not he's right again. So let's pay attention and see what he has to say. He's focusing more on the NASDAQ. And the reason why the NASDAQ is interesting is because it's exhibiting a lot of the same pattern as we note on S&P. Again, that failed breakout here in the weekly, which we went over yesterday. However, it's actually filled the upper gap. S&P stalled out as it got to the gap zone, never actually entered it. We talked about that yesterday. And there's not really much of a gap left on the downside. So the S&P is now down to the equivalent of the 50 daily. And we got to ask ourselves whether we're going to find buyers here in reverse. We're going to find buyers in the gap fill in reverse. If we have to go down to the 200 in reverse, or if we have to go down to the 50. And this is interesting because these two lines are set to cross over. So when we get a crossover of the blue line, which is the short-term price, again, seen here as 287.94, and the 290.05, or the gray line, or the long-term support, which is the 200 daily, that's called the golden cross, which means that we're building up momentum. So if we're building up momentum, and we have a pretty good push of volume off of our 2023 low, that's what matters right now. So this, the saying is that stocks take the staircase up and then the elevator down. So we got the news for today to take us down. We got our M starting. We have our head and shoulders area to watch. Now we just have to see the confirmation. So if we understand this guy's been pretty accurate, but he's not always like, this timing's not always 100%, right? Takes longer than it should. And that's what it's really coming down to. It might take longer. That's what Jerome Powell told us to do. He's like, hey, hold my beer. And man, what a move today. Let's look to the S&P again. We understand exactly where we're going now. Might gap down. And then if we think about what else are the signals that we want to pay attention to? Well, the dollar, man, that's a big candle. That's a daily bullish engulfing bullish engulfing daily candle. Yeah, that's a big one, up by 1.3%, which explains a lot of the softness in the S&P. VIX is up by 5%. Flirting with that 20 area, and we're also watching that 50-day moving average really closely. We also have the 2-year note. Man, it's just booming. So we got to zoom in nice and close to see this most recent move. Over the 50, just melting higher. Big candle today. Remember, we had a monthly bullish engulfing last month. Looking here to the 10-year note, a little bit more stalled out. So what does this tell me? Well, let's look to the final chart here, which is going to be the 2s, 10s. So what this looks at is the inversion between the 2-year note and the 10-year note. All this means is that right now, if we zoom out a little bit further to the monthly chart, we note that we're at record inversion. So what does this mean? Because, Justin, I hear this said all the time. I don't know what it means, though. So what this means is that short-term inflation expectations are about 26% higher than the long-term or the 10-year inflation expectation. That's basically what it means. So why does this matter? Well, it matters because this has been a predictor of basically every recession so far. As we continue to melt higher in a flag, and even on the weekly chart here, we have to like zoom in to like see the move. Man, it's been like relentless. That's a big push to blue skies. So this is not good. And it matters because if we look at the numbers here, we note that the 2-year note crossed over and closed above 5%. The 10-year note is not far behind it at 3.96. 4% and 5% are thresholds, but that 2-year note is basically voting and saying that, yep, we believe the Fed, we're going to be going higher for the next 2 years, but not so much in the next 10 years, which means that they believe the market is resolute, committed, ready, willing, able to do whatever it takes to get inflation down. That's the reading that I get today. Every risk asset is basically down. Every ETF is down. So this is exactly what we were expecting going into yesterday. I'm also going to just ask you one time, please and thank you, if you're still watching the video, if you could please consider smashing the thumbs up and subscribing to the channel. I would really appreciate it, and we thank you ahead of time. All right, let's jump into the next part, and let's start to leave you with that key takeaway to going into tomorrow. So if we look here to, let's actually go to, right, hold my beer. Make sure to drop me a comment and tell me what you think. Did Jerome do a good job today? Right, hold my beer, buddy. There we go, nice and down, nice and faded. Let's read a couple of headlines, and then we'll just move forward here. So Jerome Powell definitely had a pout on today, or had a scowl. He's going to be talking again tomorrow, so let's make sure we understand what was said. Powell sees higher peak for interest rates, says Fed is prepared to speed up if needed. We're just going to read the headlines from CNBC. Fed Chair Powell says interest rates are likely to be higher than previously anticipated. That's what we just went through. When we look at the 2-year note being up dramatically, rocking a solid uptrend here versus the 10-year note, which is stalling out. That's what it means. This is how I'm reading it. So these headlines appear correct, at least based on what I'm reading. Here we go. Here's the key takeaway too. Look at the over time. Powell, we have the tools to get inflation down over time. And then the 2-year note and 10-year note inversion reaches 1% or a record high. So that pretty much confirms for me that the market's believing and repriced pretty fast. Stealth fiscal stimulus is complicating the Fed's job. That's something that we heard about today as well. Just read the headlines here. China warns, right? U.S. risks, right? A big move if it cannot contain a certain city. And then one here from CNBC. I'll let you pause the video and read the headline if you want. It's not particularly something I want to say. Larry Summers urges the Fed's Powell to open the door to a 50 basis point hike and tells us everything is not a-okay. What happened in return? Well, Fed funds futures now priced in a half-point hike for March. Fed Chair Powell is prepared to speed up rate rises if warranted by data. Powell, economy strength suggests peak rate will be higher than previously anticipated. Inflation has moderated, but progress is likely to be bumpy. What happened? Man, almost instant repricing. We showed you on the 2 and 10-year note, but before and after the meeting, his testimony, doubled up, right? Doubled up. So pause the video if you want to read that. And then a final note here that the Dow was the lagger today and QQQ was the relative gainer. We'll look at that right now for a moment because I think it's really important to understand that if we're looking for more downside in tech stocks, like I'm not seeing it yet. We're back to resistance, which goes back to December. And the reason why this is interesting is because if we're expecting higher interest rates, what should really be happening? Well, we should be seeing tech stocks, which are usually unprofitable, go down more. And if we're getting a renaissance of the old economy, which means energy, right, manufacturing, materials, blah, 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 we should be seeing the Dow up and we should be seeing QQQ down. Well, that's not what we see. QQQ is down by 1.23% today. Let's look at the Dow, though. The Dow is pushing off its 50. It's down by 1.7. And the S&P is down by 1.5. So S&P is in the middle. QQQ is actually down a lot less. And the Dow was down more. So this matters because if we think about the S&P, because it's 500 stocks, well, right now, the market is being driven on a push-pull based on people rotating into tech and selling industrials. That's really, really interesting to me. It signals the change in the willingness for people to buy. Do I agree with it? Drop me a comment. Here you go. A couple more headlines. Morgan Stanley, the article we read is from the interview that he gave to Bloomberg earlier today. And he says that, right, he sees 10% more market decline, meaning the broader S&P 500. And he tells us that careful on speculative stuff. That's what he's basically saying. Here's the other reason why we want to be mindful, because we just got a fresh reading hot off the press. GDP now coming in at 2.04%. And now I'm going to leave you with one final thing, which I think will be very interesting to you. This is from our platform, thealgo.com. And if you want to come trade with me, my name is Justin, Justin from YouTube. There you go. You can sign up and get all this stuff and see exactly what I bought and sold today, because I managed to actually make some money today. So the calls from YouTube are one thing. Making money is something different. I bought a whole bunch of stocks in the last 2 days, and net, I made some money. I'm thrilled about that. So here's part of our product too. It's Dark Pool Flow. Here we're looking at the last rolling 30 days, which means the last 30 calendar days, roughly 21 sessions. We're looking at SPY. We're looking at the Dark Pool levels. We're going to note that the price right now is 39827, and we're just going to go from the bottom to the top. And note that dark pool prints, which mean basically large block trades from institutions that can afford to trade hundreds of millions, if not billions of dollars all at once. The lowest level is 394. And from our break even right now at 398.27, sorry, we note that everything below here, meaning this row, it's not really all that much. So that's the support. And then as we go higher, let's note the resistance, because there's some pretty massive levels here. We got 39908. With 2 billion traded, right? There's billions higher, 400.62, notable at 404.44. Lots of volume trading there today. I noticed it. I was watching it. 4072, which means that there's going to be a lot of friction or resistance higher for these bulls as they attempt to reverse the chart. So it's really difficult to call the exact move right now. So again, if you're looking to get an edge, I would encourage you to sign up for our 14-day free trial, where you can see exactly how I'm going to position to make money tomorrow. And if not, we've laid out the template here. We're looking for the reversal. We just have to watch and assess for the feedback. If not, thank you so much for watching. I look forward to seeing you tomorrow. Thank you.